Welcome to Daily Crypto, episode 43. We're diving deep again today into the absolute whirlwind that is the crypto market. Things move so fast. If you blink, you could seriously miss something huge. Staying on top of these daily shifts is pretty crucial.
It really is. It's not just prices jumping around. It's constant tech innovation, regulations changing shape, market mood swings.
Yes.
It all makes these daily check-ins essential to even grasp the trends.
Couldn't agree more. So let's get a snapshot right now. Where are the big players sitting?
Okay, so Bitcoin, BTC, is hovering around $109,056 there. Seen a little upward movement, about 0.92%.
No, okay, a slight nudge up. And Ethereum, ETH.
Ethereum's at $2,578 and actually showing a bit more positive momentum, up almost 2.4%.
Interesting. So more confidence there, perhaps.
Could be. These aren't just numbers, right? They hint at the underlying feel for these cornerstone assets.
What about beyond the top two? Give us a rundown.
Sure. BNB is at $662.84, still looking strong in its ecosystem. Solana, $150.17, definitely still a major player, especially for those faster applications.
And XRP, always navigating choppy waters.
Yeah, XRP is at $2.27, still dealing with its unique regulatory situation, but keeping up significant trading volume.
Right. And then we have the meme coins. Always a wild ride there.
Yeah, definitely. You got Shiba Inu at 0.0000001. Pepe sending at 0.00000000101. Bonk is 0.000000022. Dogwoof Hat at 0.8702 cents. And even Popcat is getting some buzz at 0.306583.
It's fascinating. They might seem quirky, but their collective moves, they tell you a lot about speculative interest, don't they? About what retail investors are thinking.
Absolutely. It's kind of amazing how these coins, often starting as jokes, build up serious market cap. Their volatility, yeah, it's high, but it gives you this unique window into market psychology, community, social media hype that hunt for the next big thing.
Speaking of big things, let's jump into the news. There's always something brewing. Bitcoin developments first.
Yeah, so Babylon just laid out their 2025 roadmap. Some pretty ambitious stuff in there.
Like what?
Well, Bitcoin multi-staking, for one.
Huh.
And maybe even more significant, an EVM mainnet launch.
EVM on Bitcoin. Explain that a bit. EVM is the Ethereum virtual machine, right?
Exactly. It's basically the engine that runs smart contracts and dApps on Ethereum. Bringing that kind of compatibility to Bitcoin via a mainnet, that's a big deal.
How so?
It means developers could build complex applications directly using Bitcoin security. It opens Bitcoin up to compete more in the DeFi space, which Ethereum has largely dominated. It really broadens its potential beyond just being digital gold.
Wow, okay. That does sound like a potential game changer. But on the flip side, we're seeing Bitcoin ETF inflows drop by 65%.
Yeah, that's a sharp drop. A definite cool down after that big push past $110.
So what's the takeaway there? Less institutional appetite now.
It certainly signals a shift. After that initial excitement, big money flowing in, maybe we're seeing some consolidation, some profit-taking, perhaps a more cautious stance from the big investors.
A wait-and-see approach.
Possibly. It doesn't necessarily mean long-term bearishness, but the floodgates of new institutional money seem to have slowed down for now. A reminder that market cycles happen, even with big players involved.
Makes sense. And then you have external factors, like Elon Musk, his new America Party embracing Bitcoin, calling fiat hopeless.
That's definitely a headline grabber. It throws up that question again, doesn't it? How much do these high-profile endorsements really move the needle long-term?
Versus the actual tech and market forces.
Exactly. Short-term buzz, sure.
Yeah.
But sustained growth. That likely still boils down to the fundamentals, tech, network, real use cases. It's always that interplay between narrative and substance.
Interesting tension. Okay, let's shift to Ethereum. The co-founder proposed increasing the transaction gas limit. What's the goal there?
Well, Ethereum's constantly wrestling with network traffic, high fees, right? The gas limit caps how much computational work sits in a block.
So increasing it means more transactions per block.
Potentially, yes.
Yeah.
The aim is better security and efficiency, processing more transactions. But it's a balancing act.
How so?
It puts more load on the network nodes. If only powerful players can run nodes because it's computationally heavier, you risk more centralization. So it's that classic challenge, scaling up without sacrificing decentralization.
Always the trade-offs. And speaking of decentralization, Twitter's co-founder launching a decentralized messaging app, Beta, BitChat.
Yeah, that's quite interesting. It shows that decentralization idea spreading beyond just finance into areas like communication.
A push for more user control, less censorship.
That seems to be the drive. It's part of this wider exploration of alternatives to the big centralized platforms. If it takes off, it could be a real step towards a more user-controlled internet. Reflects a broader desire for digital autonomy, I think.
That desire is definitely a powerful force. But then there's the regulatory side. Chinese authorities are warning about stablecoin fraud.
hmm That highlights the tricky path stablecoins are walking globally. Regulators see potential risks, illicit use, financial stability concerns if they're not properly managed.
Even if they're designed to be stable.
Right. China's warning, despite local interest, just shows how governments worldwide are worried about consumer protection, money laundering. They want to bring stablecoins firmly under financial oversight.
That dance between innovation and control again. Okay, what about NFTs? Sales are up.
Yeah, a noticeable jump. Up 10% overall to about $136.5 million. And CryptoPunk saw a big pop, like 26%.
So the NFT space isn't dead after all.
It seems not. After that initial crazy hype cooled off, many thought it was over. But this sustained activity, especially for established collections like Punk's, suggests the market's maturing a bit.
Utility and history becoming more important?
Maybe. It's fascinating that even when the wider crypto market cools, niches like NFTs can still show life. Driven by collectors, communities, Web3 integrations, it suggests digital collectibles are finding their place, even if that speculative frenzy has died down somewhat.
Okay, so pulling back a bit, what does all this mean for broader trends, especially with regulations tightening globally? We're seeing the UK cracking down. Harsher fines.
Absolutely. That's part of a global shift from just watching crypto to actively enforcing rules. The UK's move signals less tolerance for non-compliance, a bigger focus on protecting investors and ensuring market integrity. It's about pulling crypto into the established financial regulatory world.
And Sweden's move sounds even more drastic, seizing crypto without direct proof of a crime.
That's a really significant one. It touches on basic ideas about property rights, innocent until proven guilty.
Yeah.
Allowing seizures like that puts the burden squarely on the individual to prove their crypto is legitimate. It could set a really strong, maybe worrying precedent for how governments handle digital assets, especially if they suspect something but lack hard evidence. Big questions about privacy and legal safeguards there.
A very tricky area. And it's not just individuals, right? Turkey is going after decentralized exchanges, starting with PancakeSwap.
Exactly. That signals regulators are now looking closely at DXs, which have often operated with less direct oversight.
So could Uniswap be next?
It's definitely plausible. Cracking down on one major DEX often means they intend to regulate the whole sector. Governments worry about AML KYC compliance. So yeah, major DEXs like Uniswap are likely facing more scrutiny ahead. DeFi might need to adapt to stricter rules.
Meanwhile, some centralized exchanges like OKX are defending their strict compliance rules, trying to get ahead.
That seems to be the strategy. For centralized platforms, having robust KYC isn't just about following rules now. It's about building trust, getting regulatory approval long-term. It suggests the future for major exchanges involves being very careful, very compliant to bridge that gap between TradFi and crypto.
Makes sense, navigating that minefield. Okay, shifting to performance and rivalries, altcoins are a mixed bag. XLM, Stellar Lumens, facing risk because of a funding rate crash. What's that?
Funding rates. In perpetual futures markets, traders pay these fees to each other to keep the contract price close to the spot price. A funding rate crash for XLM basically means it's suddenly very expensive to bet on its price going up, or short sellers are getting paid.
So, strong bearish sentiment.
Overwhelmingly so, typically. It signals short sellers are dominant, putting downward pressure on the price as long holders might bail to avoid the high costs. Shows you need to look beyond just market cap for risk in altcoins.
Never straightforward. And meme coins, again, Pepe drops 40%, but then there's talk of it leaping higher.
Yeah.
Maybe even outshining us in DOGE.
That's the meme coin market in a nutshell, isn't it? Okay. Super volatile, driven by hype, community, that constant hunt for the next 100x coin.
A cycle of pump, correction, and then new speculation.
Pretty much. A coin gets hot, huge rally, big drop, then the speculation machine starts up again, often hyping the next contender. It's this constant battle for attention fueled by, well, sometimes irrational excitement.
Definitely tests your psychology. What about Ethereum versus Solana? Hearing Ethereum is losing ground in app revenue.
Yeah, that's a notable trend. Solana's lower fees and higher speed are clearly attractive for developers and users.
So Solana might rally to $200.
There's speculation, yeah. Capturing dApp revenue is significant. And things like Solana handling 95% of tokenized stock trading volume via X stocks that really highlights its edge for specific high-speed uses needing low fees.
Like instant settlement for stocks?
Exactly. That kind of niche dominance could be a big differentiator long-term and fuel potential gains. Shows how specialized efficiency can win market share, even against a giant like Ethereum.
Very interesting dynamic. Beyond immediate prices, we're seeing deeper questions pop up too, right? Like, can AI predict crypto? What's wrap stiff?
Right. AI for crypto prediction. It's a fascinating frontier, but predicting these markets is incredibly tough, even for AI. And things like Wrapstet, that's a liquid staking token for Ethereum, show how the market's getting more sophisticated.
Liquid staking.
Yeah, lets you earn staking rewards on ETH, but still have a token you can trade or use in DeFi. It just shows the ongoing innovation and complexity in DeFi. The market's maturing, demanding more advanced tools.
Okay, let's pivot slightly. I want to touch on something we see a lot, this partner content or sponsored insights in crypto news.
Oh yeah, that's everywhere. It's crucial to be aware of. These articles often look like analysis, but are basically predicting huge gains. You can't take them as advice, obviously, but they're a good indicator of market hype.
Tells you what narratives are catching on with retail.
Exactly. You see headlines like, 3 cryptos under 50 cents following the Ethereum millionaire playbook, or Exishab whales moving into XYZ-verse for 1000x gains.
Or AA soaring, or coins forecast for like 21,000% rallies. It's wild.
It taps right into that desire for quick wealth, right? Finding the next big thing, making millions faster than SOL did. It's a constant stream designed to grab attention and push investment towards newer, maybe riskier projects.
And it's not just tokens. Lots of talk about cloud mining, passive income, Bow miner, GMO miner, earn mining. Those names pop up.
Right. It shows the wide range of speculative interests and investment schemes being marketed hard in this space.
So wrapping this all up, it's incredibly complex, isn't it?
It really is. You've got truly groundbreaking tech pushing boundaries, facing off against this constantly shifting, sometimes harsh regulatory landscape, and all stirred together with a market that's highly speculative, driven by both real innovation and, let's be honest, a lot of hype.
Piecing it all together requires sifting through a lot of noise.
Absolutely. You have to
Yeah.
separate genuine signals from the hype, understand the motivations behind different narratives, both the tech dreams and the get-rich-quick schemes.
For sure. The speed of change, the innovation, the unpredictability. It makes crypto one of the most fascinating and maybe transformative areas to follow. Never a dull moment.
Definitely not. It really makes you rethink basic ideas about money, ownership, control in our digital world.
So thinking about all these rapid shifts, tech, rules, sentiment, what does this fast evolution of crypto tell us about where global finance might be heading? And maybe more importantly for you listening, how do you prepare for a future where these traditional and decentralized systems seem set to collide and intertwine more and more? Something to chew on. Thanks for joining us for this deep dive into today's crypto world. We'll catch you on the next one.